Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at 3 stocks that analysts from Goldman Sachs think could grow over 50%. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Today we're taking a look at 3 stocks that all come in with strong buy ratings and have some pretty attractive upside potential. So we're going to take a look at these companies, what it is that they do, and what analysts are predicting for their stock's future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well so you can stay up to date with all of our latest content. Alright, let's get right into these 3 strong buy stocks. The first company on our list today is called SMFR Holdings. Their stock trades under the ticker SMFR and is currently priced at $6.96 per share. SMFR Holdings brings together AI and machine learning for the healthcare industry. They're founded on the idea that more information, deeper analysis, and increased engagement will improve the diagnosis, treatment, and prevention of disease. Their main focuses include Centralis, which is their unique analytics platform, as well as women's health, precision oncology, and biopharma. The company is generating and managing over 39 plus petabytes of data per month and accessioning over 250,000 next-generation sequencing tests annually with their approximately 1,150 employees. Their health intelligence platform, Centralis, enables a multidimensional dynamic model of human health based on clinical and genomic data with the aim of designing optimal, individualized understandings of disease and wellness. SMFR Holdings has been around since 2017, but just began trading on the public markets this July after completing a SPAC merger with CM Life Sciences. The SPAC merger brought about $500 million in new capital for SMFR. Earlier this month, the company released their second quarterly report as a publicly traded company. The company saw a 36% increase in test volume and a 17% increase in revenue. The top line came in at $43.2 million, and at the bottom line, the company reported a 15-cent profit per share, which was a sharp turnaround from the 21-cent per share loss reported in Q2. Weighing in on the stock from Goldman Sachs is analyst Matthew Sachs. And he likes SMFR for 4 different reasons. First is their established 200 million germline business. Second is their large untapped somatic testing market opportunity. Third is the potential to achieve earlier detection through unparalleled high-resolution longitudinal data access to tens of millions of patients. And fourth is the enterprise sales approach targeting health systems that allows for broader uptake and accelerated adoption. Matthew is one of 4 analysts that have a current rating on the stock, and it does come in with unanimous buy ratings. The average price target comes in at $12.50, which would be a 79% upside from current prices. Looking at our detailed list of analyst forecasts, our most recent ratings both come in at the $12 price point, which would be a 72% growth potential. The second company on our list today is called ARIS Water Solutions. Trading under the ticker ARIS, they're currently priced at $13.92 per share. ARIS Water Solutions is a midstream company in the Permian Basin hydrocarbon scene. This Houston-based firm develops and operates water infrastructure and recycling capabilities for the Permian's oil and gas producers. They have over 640 miles of pipeline. And they are the pioneer of cost-effective full-cycle water management. Their produced water handling includes gathering, treatment, and disposal of produced water over the life of a well, and their water solutions include the sale of recycled and groundwater for well completions. They sit at the heart of the U.S. energy market, and their assets and operations consist of integrated produced water infrastructure systems that provide high-capacity gathering, transportation, disposal, recycling, and brackish water supply solutions to their customers. ARIS Water Solutions just hit the public market near the end of October. They put over 17 million shares on the market at $13 per share, netting the company about $214 million in proceeds. Just a few weeks after that, the company released their first quarterly report as a publicly traded company. Their recycled water volume sold increased 195%, and they had a record adjusted EBITDA of $30.8 million, which was up 56%. The company reported revenue of $59.5 million, and the free cash flow of $6.1 million helped bump their cash on hand to $36.4 million. Weighing in on the stock from Goldman Sachs was analyst John McKay. He said that we see tailwinds not only from strong underlying activity levels, but also from an increasing focus on ESG metrics by its blue-chip E&P customer base, supporting growth on its produced water pipeline and recycling footprint. While we believe earnings execution will be a major focus over the next several quarters and capital allocation plans will need to firm up over the longer term, we see considerable upside from current levels. Altogether, the stock has 9 current analyst ratings and comes in as a strong buy based on 7 buy ratings and 2 holds. The average price target comes in at $17.78, which would be a growth potential of over 27%. On the low end, we do have a hold rating at $15, which would be an upside of about 7.7%. And on the high end, we have our Goldman Sachs analyst with a price target of $23. That would be a growth of 65% from current prices. And last but not least today, we have Horizon Therapeutics. Trading under the ticker HZNP, they're currently priced at $105.88 per share. Horizon Therapeutics is engaged in the research of treatments for rare diseases, especially autoimmune and severe inflammatory diseases. The company has rapidly transformed into a high-growth biotech company. From 2013, where they just had 2 medicines for net sales of $74 million, they've now grown into net sales of $2.2 billion, with 12 different medicines and 8 of those being for rare diseases. The company also has an active research program with an abundance of products in their pipeline. They have 3 upcoming trial initiations with 10 different data readouts expected between 2021 and 2023. Horizon's approved portfolio includes 11 different treatments, and they've had some highlights as of late. This includes TEPEZZA, which has been one of the most successful rare disease medicine launches and is the first and only medicine approved for thyroid eye disease. They expect the global annual net sales potential of TEPEZZA to reach over $3.5 billion. They also have KRYSTEXXA, which has transformed an 11-year-old biologic into a high-growth medicine and is the only medicine approved for uncontrolled gout, rapidly reversing the disease progression. They expect the U.S. net sales potential of KRYSTEXXA to reach over $1 billion. Earlier this month, Horizon released their most recent quarterly earnings report. The company showed $1.04 billion in top-line revenues, a company record. TEPEZZA revenue reached $616.4 million, and KRYSTEXXA sales were $158.1 million. Both of these product sales were at record levels. The company's total revenue was up 63% year over year. One analyst covering the stock is Madhu Kumar from Goldman Sachs. He said that we consider Horizon's blockbuster asset TEPEZZA as a primary value driver, with optimism for KRYSTEXXA and UPLIZNA to also provide considerable growth to their top-line revenue. Our view is supported by several clinical studies supporting increased patient compliance for KRYSTEXXA, with early success already demonstrated and the potential for UPLIZNA to be best in class. The Horizon Therapeutics stock has 6 current analyst ratings and comes in with unanimous buys. The average price target comes in at $146.67, which would be an upside potential of 38.5%. Taking a look at our detailed list of analyst forecasts, on the low end we do have a price target from 2 months ago with an upside of 24.5%. The most recent rating from Goldman Sachs comes in at $168, which would be growth potential of over 58%. So there we have 3 stocks that analysts from Goldman Sachs are feeling quite bullish on. Now you guys know I always love hearing from you, so let me know your thoughts on these 3 companies in the comments down below. Were they on your radar already, and what do you think of their stock's future growth potential? As always, please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and I'll see you back here next time.